Welcome everybody to a new video of Tradomics called the Green Energy Stocks. My name is Dario, and in this video we're gonna have a look by using our T-cycle analysis at four relevant green energy stocks. So let's start with the first one, which is called Enphase Energy. Um, we issued an analysis a month ago, and we were saying in that video that there were two important key levels that after the break could have triggered more downward or upward trend. In this case, we were saying that $123.51 were a checkpoint or point of control to eventually have more rise to the upside given a potential T+2 turn into a positive one. And here we had $95.03 in which we could have turned a T+3 in a negative cycle. So first of all, we with this candle on the 5th of August 2024, we were really close to this swing at $95, but we didn't break this up. But we have had a really sideway trend. So basically no trend at all. First of all, we didn't break this low even in the latest weeks. So therefore here I can update the chart by removing the line and removing the arrow. But what happened is that we went over this swing at $122.95, but we have had this dark cloud cover candle that pulled the price back towards the downside. And actually, if we gauge the total duration here, we have a T+1. So after 21 days, we had this pullback, and the price actually retraced by a percentage of 22.78%. So really volatile stock. Now the thing is that I put here a T+2 upward cycle with a question mark, because if this was a T+2, then after the break we should have gone more to the upside, because the minimum duration of a T+2 is 24 bars. So we could have had after the break at least other 2 days in which the price could have gone to reach the first target price level, which was this one at $141. But this didn't happen. It didn't happen because generally after a T+2 we expect another T+2, but it's not always the case. In fact, if we gauge the total duration from this top to this top, we have 51 bars, which is already more than a minimum duration for a T+3. T+3 means 3 months. And actually, what can happen less frequently, but it happens, and that's why I left a question mark, is we can have a T+2 plus a T+1, and the sum of the duration of a T+2 and T+1 gives already a T+3. And then after the closing of a T+3, another T+3 can be on the edge or can be in development. Therefore, this is what the situation looks like at the moment. So here we have to move or erase the T+2 and have just a T+1. But instead, what happened regarding the downward cycles, here we had also here the downward cycles. Let's gauge again just to be clear on that. Yes, we had also the closing of a T+1 hybrid cycle, which is 23 bars. So here we can put also the downward cycle. I was expecting a T+2, but we had exactly the same correspondency between upward and downward cycle, or downward and reversal cycles. So here on the swings on the 26th of August 2024, we can put a T+3 upward cycle now in development, and by the rules we cannot go back to the stop before at least the duration of a T+1, which is 13 bars. Now we have definitely reached that duration because we are at 29 bars. And let's gauge also this stop here, because also in this case we add the closing of a T+1. Okay, now with this this T+1 closed, what we can see from the downward cycle is that here we have 48 bars. So here we have 23 or 48 bars. So here we have, and this is, yeah, exactly. That's what it was. So this is basically weekly hybrid cycle, but it's more Bayer tongue. So it's a Bayer tongue between 2t+2, which is a Bayer tongue of 3 degrees less, which is a t-1. So here we have the t-1, and you can see, without going into the intraday chart, but being a little bit expert with this technique, I already know where to see. So this is a t-1, which is basically a Bayer tongue of a duration of 4 days. So a t-1 is between 4 to 5 days, and it's a 3 degrees less extra time between a t+2 and a second t+2. So here now we can update the chart by putting a t+2. And now what is important to keep monitor is definitely the low. And I just put the arrow here. So this low is critical to is critical for eventual additional downtrend. Why that? Because here we have the condition for a T+2 downward cycles that at the moment has reached 19 bars. If the price will break in the next week this level, which is at $100.48, then for the remaining time we could have a downtrend. This downtrend or potential downtrend that might incur by breaking this low could eventually close the T+5, because now the T+5 has already more than a minimum duration to close it. So 225 bars, it's already time that is encompassed between 190 and 338 bars. So here we might expect, if this low will be broken up, eventual additional downtrend to close the T+5. But the situation is not over yet, because if you might deem that in working with stock markets, but let's say markets in general is easy or not so complicated, here we have to also consider another condition. When we have over this candle, we have the price at $139.65, and this candle here, which is the beginning of T+4, is at 141.63. This means that despite the level of resistance that in other channel you can hear about, of course, we have the price that was pushed back in around this area, this area, this area, and so on. What is important is that this candle went over this candle, because we had a couple of dollars of difference. Therefore, the T+5 upward cycle is positive. So we might expect by the finish of the duration of a T+5, but also the finish of duration of a T+4, a return in the area of $141.63. And we have to go over, even 1 cent is enough, 141.64. So over the midterm, the price should basically return back to the top at 141.633 and even go beyond. And the first target eventually will be this one at 153.56, and the second one will be 175.59. But in the meantime, we have more than enough time to do whatever they want, because this T+5 has reached a duration of 195 days, but we can extend the duration to a median duration on around 260 and also beyond, even after the Q1 2025. So given that also the T+5 downward and upward cycle um, were born with a 29 candles difference, meaning 29 days, roughly a month. Here, the situation is that we can proceed without no trend or a steady state condition. We know that we have more than already enough time to eventually close the downward T+5 cycle, but we also know that after the T+5 we can have another T+5, and considering that this upward T+5 yearly cycle is positive, then we have to return back to the tops, or to the tops meaning $141.63. Okay, so that would be the scenario for the midterm. But in the short term, what is important to monitor is the level at $100.48. Okay, if we break this down, then we can gauge also the remaining days eventually to proceed to the downtrend. And one of the possible targets is this at $79.14 and then eventually $73.49. So this is all for Enphase Energy, and now we move to the next one. The second company I have on my radar is First Solar, which is the peers of Enphase Energy. So here there is the chart. Here I propose you the chart as following. So from this top, occurred on the 12th of May 2023, we have at the beginning of the T+5 upward cycle, yearly cycle, that thanks to this candle turned into a positive one, and the development of that cycle finished after 272 bars on the 12th of June 2024. Now we are on the second T+5 upward cycle, and as a consequence from the downward perspective, we have at the beginning of the T+5 yearly downward cycle on the 10th of November 2023. And this yearly cycle has been divided as the first 3-month cycle, a neutral T+3, the second one, another T+3 cycle, and then a third T+3 downward cycle. The first one was slightly neutral, the second one was positive, and the second one was positive. Positive because the end in which it ended was higher compared to the low from in which the end was higher compared to the low from which it started. Same situation for the second one, and mostly same situation as the first one, even if the low in which it ended was really close from the low from which it started. Having said that, now given the push toward the upside, we potentially are on the second on the T+4 or on a T+4. If we gauge the total duration from the low until here, we have 182 days. So this duration doesn't fit into a nearly T+5 downward cycle or upward cycle. Therefore, the T+5 cannot finish here. But here, so from the 5th of August 2024, we are on the second T+4 or T+3. It's more a T+4, and therefore the T+5 downward cycle is still ongoing. So considering this T+4 that was born here on the 5th of August, we have had the first T+2 that had a duration of 25 days. And now we are on the second T+2. And what is important to know is that we have the close of the first T weekly cycle here after 8 bars. This is the downward cycle. And after the closing of this weekly cycle, we have had another weekly negative cycle, which ended with the bar made on the 1st of October 2024 after 8 days. So you can always check this methodology and always gauge the time so that you can also apply it on your own. The first T weekly cycle and the second weekly cycle have generated eventually a T+1. I say eventually because a T+1 require 2 degrees less duration, so at least a couple of days over this low, which is something that is happening at the moment. So here potentially we have not just a T, but also a T+1. But this cycle T+1 is not pushing really much towards the upside because we have just 1-2 candles and such let's say such bounce to the upside was already interrupted after reaching the second level of Fibonacci at 38%. So really not big thing here. And there is also an explanation why. So we don't have so much push to the upside because from the top, this candle on the 27th of September, we might have the beginning of a T+3. So the beginning of a T+3 means that we cannot, the price cannot go back to the absolute top at $262.72 before a couple of weeks. And we have had just 6 days below this candle. Therefore, this T+3, in order to be developed, needs to further push back to the downside. Now, how can we understand next week what is going to happen and whether this is the case? Because this is our main assumption, right? So it's critical that these swings will be broken up and needs to be broken up at the beginning of the next week. Because if we want to further proceed to the downside and have a certain depth in which the T+3 can be developed, then the sooner we go lower this level, the better would be to develop the shape. So we might have potentially at the beginning of the next week the breakup of this low. But as far as it doesn't happen, we might have the price to float around the moving average 50 period. Therefore, the next week, especially the beginning of next week, will be important to understand whether this will be confirmed as a T+3 and whether this eventually weekly cycle will turn into a negative cycle. And by turning to a negative cycle, will take this shape, and the tail of the cycle can last until minimum, medium, and maximum duration of a weekly cycle, which is encompassed between 6 to up to 11 or 12 days if we're going to have a hybrid T cycle. In the meantime, if we gauge the total duration, we are at 19 bars. So this move potentially, if happens, and if this will be broken up, will also allow the closing of a T+2 next week. Okay, so here on this stock over the short term, be really careful because we have a strong, potentially the beginning of a strong push to the downside that might incur next week. And of course, the other target would be the $208.54, and then the second one will be the moving average, which at the moment is around $199.17. Having said that, this is all for First Solar. So then let's move to the next one. The third stock that belongs to this group or the next company is called Nextera Energy. So here we have a completely different setup. And what we can say about this setup is the following. First of all, from this low made on the October 2023, we have had the beginning of a T+5, undoubtedly a T+5, which has reached um, the top here on Thursday, 3rd of October, with a gain of 87%. So also this stocks is quite, let's say, volatile, but here we have had a really nice trend. So for those of you that might have this stock in your portfolio, or those who want to invest in this company, we have to study the chart setup from the upward cycle perspective, because the question is how long can the rally proceed, and here we're going to give the answer. So in order to answer, the first thing that we have to consider is this candle on the 21st of April 2023. From this candle, we have at the beginning of a T+5 upward cycle. And if we gauge the total duration of this T+5, according to the top that we have had on Thursday, we have reached a total duration of 365 bars. So 365 bars is not encompassed in the duration of a T+5. It's although encompassed in a T+5H. But the T+5H or hybrid cycle is something that occurred or happens quite seldom. So we have to study this upward cycle by segmenting shorter cycles. And especially we have to segment T+4 cycles. So from this T+5, we have had an upward cycle that was of 62 bars, so a T+3 upward cycle. And then we add the beginning of a T+4. This T+4 has been segmented in the first monthly cycle, second monthly cycle, and third monthly cycle. The first was negative, the second was negative, and the last one was positive, because the top in which it ended was higher compared from the top from which it started. If we gauge the total duration of this T+4, we have 100 bars. Now, what happened after this is that we have had a new T+4. Was this top the beginning of a T+5? No, because we didn't have enough duration to close a T+5, but just 163 bars, which is a T+4. Okay, so we have had the second T+4, and we have had another T+4. This T+4 that started towards the end of last year, 2023, lasted 115 bars. Okay, now we have now another upward cycle that started from desktop the 31st of May 2024 and turned into a positive one, because now this cycle, upward cycle, after the break off with this candle, now is turned into positive. Now, considering that the duration below its maximum top, so it was broken with this candle, sorry. Considering the duration below its maximum top is 42 bars, so is 2 degrees less compared to what? A T plus 4. Because here we have 42 bars, which is a duration of a T plus 2. Therefore, we have potentially the beginning of a T plus 4. It might be also a T plus 3, because a T plus 3 needs less time to have um, its development. But in the best case, we have a T plus 4. Now, if we consider the duration of a T plus 4, we can extend the duration at least until 94 days. Okay, this means that we can potentially have prosecution of the rally until Monday, 14th of October 2024. But we can also extend the rally until its medium duration, which is around 120 days. Okay, take 120 days as a reference, but it's also 121, 122. So we can extend the rally until 21st of November, but we can also go until its maximum duration, 168 days. 168 days means that we can keep rallying until January, end of January 2025. I'm saying that I take all the durations because given that we are out of a duration, a standard duration of a T plus 5, this additional cycle is either a bear tongue or the beginning of a cycle that has turned into a positive one given the strong volumetric tendency. And here we didn't have time to develop a T plus 5. So it might be that this upward cycle is a 2-year cycles divided in a first yearly cycle plus something else that can extend the duration until 2 years. And 2-year cycles means that the minimum duration of 2-year cycle, if you multiply 190 times 2, is 380 days. And 380 days is happening when? Is happening 23 of October 2024. And on top of it, we have the earning release on the 22 of October. So you can also, let's say, verify that algos or the high frequency trading are set up in a way that they, let's say, they are planned also to trigger some volatile days when the earnings release are happening because they know it in advance, of course. Now, having said that, when we gauge the total duration from the T plus 3 until this candle, we have 87 bars. So here intentionally, I put a T because here we have wear out all the time that we could have for a T plus 3. Now, this is a T plus 3, but it's also a T plus 4. So I would not exclude the possibility to have another T plus 2, because here we had also the duration of a T plus 2, 43 days maximum duration or close to maximum duration. So we can have here a T plus 2 and eventually a return back to the upside. Okay. because this is positive and this also it's a T plus 4. But you need now to be careful because the time that we had at our disposal is for a T plus 3 is we're out. And the more we extend the time, the more we can also extend the possibility to have a retracement. Because time here it's over the limit. And unless there is a strong tendency, and it happens also seldom, where we have a T plus 5 plus a T plus 4 because we don't have enough time to start a T plus 5, therefore the price is pushed toward the upside by a lot of buyers. The thing that you have to bear in mind, and this is the takeaway, is that this law needs to be monitored carefully, because here we have the beginning of a T plus 2. Okay, and if this will be broken down, then we might have the possibility to begin the retracement. Okay, so the earnings release will be a triggering point eventually to start an upward cycle that might be wider than a T plus 4, something like a T plus 5. Okay, so we need to be really careful now from the next week onwards, because we might have the high possibility of a retracement, and this it's also reinforced by the fact that here we have 251 bars, so we have also a median duration of a T plus 5 downward cycle to begin its close. Its closing. And to close a T plus 5, we need at least a T plus 2 that is negative. So we need a certain amount of time, which is between 1 and 2 months to close it. So it's not going to happen tomorrow. It takes 1 or 2 months at least. Therefore, here we start seeing enough time for a T plus 5 to start the downtrend and to have a T plus 2 negative, or eventually even more than a T plus 2. And on the upward cycles perspective, we have more than enough time to begin another T plus 5 or a T plus 6. Okay, so you have to bear in mind these things. I will remove this one and I leave intentionally the arrow here. So the price, the checkpoint is at 81.47 dollars. Okay, so bear this in mind for the next week, on the weeks to come. And cherry on the pie, here we have a divergence. Okay, bearish divergence. That's just a cherry on the pie, but it's good also to implement some indicators in our analysis as well. Having said that, let's move to the last one. The last company I took in consideration, last but not least, is called Brookfield Renewable Partners. So according to the chart setup that we see here, we can say that from the low occurred on the 3rd of October 2023, we have had the first downward T plus 4 cycle, which was pretty neutral. And then now we are on the second T plus 4, and this second T plus 4 has been divided in the first T plus 3, and now we are on the second T plus 3. This second T plus 3 has been divided in the first T plus 2, and now we are on the second T plus 2. So here you see how the Matryoshka effect works. Now, what we can say regarding the downward cycle is that with the duration of this second T plus 3, we have reached a duration of 43 days. So basically here we are still on the second T plus 2, and potentially here we have closed first T+1. So we have to monitor how the end of the day will be. But now at the moment we are seeing bounce back to the upside thanks to the touch of the moving average 21 periods. If we gauge the total duration of this downward cycle, we have 253 days. If we gauge the duration until here, we have 211 days. So this is eventually already a T+5. Eventually, it's a T+5. Do we know whether this is a T+5 or not? At the moment, it's too early to say that because we don't have enough time or enough bars over this candle to say that this is a T+5. Even if, and this is the interesting part of the analysis, thanks to the fact that we had a push to the upside and this nice rally that allowed the price to gain 28% in 38 days, we went over this top at $28. This means that here we have potentially the beginning of T+5 upward cycle. And this breaks occurred after really short time. So this break occurred after 83 days. So now we are at 80 with the absolute top 88. Okay. So what can we say about that? First of all, if we gauge here the duration of this previous T+5, and of course, here we have all the conditions to have a new T+5, 259 bars. But if eventually we want to extend here 346 days, can 346 days encompass it in a T+5? The answer is no. But we know that eventually we can find some bear tongues, especially between wider cycles. So wider means more than a T+3. Generally, they are not so seldom, so they can come. But if we not gonna have an harsh retracement from this top, and so far we haven't had a retracement of strong retracement, we have to consider this top as the beginning of a T+5. Therefore, if we have the beginning of T+5 and this is already positive, the key message is that this rally can continue up to at least base case scenario up to February 26th of February 2025. We also have to take in consideration that now we have enough time though to close the T+3 because we have reached 86 bars. And considering this this downtrend or short-term downtrend, here we have to be careful because a new T+3 might be on the edge, and therefore the price cannot go back to the top before at least a couple of weeks. Okay, so the most probable setup or framing of the chart is this one with a T+5 commenced here, turn it into a positive one. Now we might have a T+3, so retracement for at least a couple of weeks, if not more, but then a return to the upside or to the level price level $28.61. If we will start to see a retracement that, and I here give you another great level for free. If we will start to see a retracement that will go below this one at $24, then we will probably have not just a T+3, but a T+5. But the condition to begin a T+5 are less high compared to the, let's say, to the possibilities that a T+5 commenced here, because here we have already the condition to have a T+5. Here it needs to be demonstrated, and in order to be demonstrated takes time. Okay, so if the retracement will start, so after this bounce eventually that will be closed today, we will start to see a falling and breaking this low at 24 20 23.53, sorry, that's what 23.53, then we might have a T+5. But if this is not going to happen, then this is the most probable way. So beginning of a T+3, or eventually a T+2 if they want to push really the price harshly to the upside, and then continuation of the trend on the upside until at least February 2025. Okay, so that's is the situation. Yes, February 2025 at least. Then we can proceed to a mid duration until May, June 2025. So that is the situation that we can see on Brookfield Renewable. So I hope that this video has given you lots of insights, useful insights, predictive insights, because Tradomic is not reactive, it's predictive, thanks to a methodology that is based on statistic and by time. If you liked our video, please subscribe to our channel and put a like just to support us in our daily work that we do for free to put investors and traders aware of the risk, but also the opportunities that the stock market reveals every day. Thanks for watching, and see you to the next episode.